I would not be surprised to see the Fed cut rates this year. And one of the other reasons that we're very focused on this message that the bigger risk is deflation. It's also a very big opportunity. When we look at deflation, there's good deflation and there's bad deflation. The bad deflation is caused by demand destruction. The good deflation creates demand, and that is what our research is centered on, which is technologically enabled innovation that rides down learning curves, which are expressed by cost declines, which turn into price declines. You'll notice that Tesla is cutting prices, and many people jump to the conclusion that, oh, they're having so much trouble now, there's so much more competition. No, Tesla can cut prices now that supply chain issues are passing us, because it is riding down a cost curve. The battery cost curve declines.
Cathie Wood of ARK Invest Management reportedly said that it's not surprising if the Federal Reserve cuts rates this year, and she believes the bigger risk is deflation. After dialing down the rate hike pace during the February policy where the Federal Reserve hiked rates on expected lines, Chairman Jerome Powell did acknowledge that inflation has started declining. He stated that the current outlook holds for slower growth, modest gains in unemployment, and a slow fall in inflation. If the economy performs broadly in line with those expectations, it will not be appropriate to cut rates this year. Wood also asserted her bull case for Tesla, explaining why the EV maker could go for price cuts. Last month, Tesla dropped its prices dramatically, up to 20%. Auto companies offering discounts to promote sales is nothing new, but this move sparked a lot of reaction. So what was so special about these price cuts, and what do they mean? According to car gurus, prices overall are down less than 2% for the month, while prices for Tesla is down 8%. Globally, Tesla delivered 1.3 million vehicles last year, and it plans to sell 1.8 million this year. The more rivals follow suit and cut their own prices, the more dramatic the impact could be.
I know. The real winners here are going to be those companies that have proprietary data and have lots of it, have the best domain expertise, best AI expertise, the best pools of high quality data to basically create new businesses. Last year was a terrible year for everything crypto. But if you think about what happened, it was the centralized, opaque players who went bankrupt: FTX, Celsius, 3 Hours Capital. And what did we see from Bitcoin? Bitcoin is completely decentralized and transparent. It started because of 0809, the lack of transparency in the traditional financial services ecosystem. And I remember when we did our research, and Art Laffer, I mentioned him the first time he was on your show. Yep. He took us through what Bitcoin meant to him, and it was, wow, Art. This is a rules-based monetary, it's a rules-based digital monetary system, and it's global, and there's no human intervention. It's very disciplined. It's mathematically metered to top out at 21 million units. Well, in the last 3 years, the responses to COVID, the fiscal and monetary responses that, in many countries are causing hyperinflation and, fiscal crises. We're seeing protests and riots all over the place. Well, where do these people go for an insurance policy against an implosion in their purchasing power and wealth? It is in something like Bitcoin. Bitcoin is an insurance policy, and it is an insurance policy for everyone against confiscation of wealth.
Bitcoin is the greatest form of defense against wealth confiscation and an insurance policy for the developing world, according to Cathie Wood. The investor, a longtime bull for the crypto industry, stands by her $1 million Bitcoin price target, believing the asset presents opportunities for wealth preservation to the rich and poor alike. Earlier this week, ARK Invest Management released its 7th edition of the Big Ideas 2023, which suggests that Bitcoin is on a trajectory that could see it become a multi-trillion-dollar market in the coming years. There's hyperinflation all over the world as their currencies have fallen apart, said Wood in an interview. Those populations need a fallback and insurance policy like Bitcoin. Wood believes that high net worth individuals also have much to gain by using Bitcoin as a shield against confiscation through inflation. The top cryptocurrency by market cap has a supply limit of 21 million coins, making it immune to debasement through money printing, as is common of fiat currencies. Though cryptocurrency users often store the keys to their coins using wallet hardware, their wallets are technically recoverable from anywhere if they can remember their unique seed phrase, usually a list of 12 to 24 random words.
Shock to most people is how well we held our assets. Our underperformance started in February of 21 when people were starting to get vaccinated, going back to work, and these fears of inflation started to surface. So since February of 21, we have seen a massive down round in our innovation strategies. And in 21, we had very significant inflows, most of which we kept. I think the net was 17 billion that year. Last year, again, a horrific year. I think for the year, our flagship was, so ARKK, was inflows, more than $1.5 billion. And I think that shocked a lot of people. What we saw was averaging down. Many of our loyal shareholders did average down. And I think one of the reasons they did is we were out there every step of the way, giving away our research, reassuring our clients that actually innovation solves problems. And we have so many problems now created by supply chain problems, the war, created by the Fed, and the demand destruction, which is hurting margins, which technology will solve in terms of increasing productivity. And I think because we are so prolific in our research, our analysts are amazing in terms of the kind of original research they're doing. So our clients and others are reading research from us that they're not seeing from anyone else or anyone at all.
Wood's flagship ARK Innovation Fund had its best month ever in January, dating all the way back to its inception in 2014. It closed the month at $39.93 per share, up 28 since January. Cathie reiterated her firm belief in the bullish scenario for Bitcoin price in the years to come. She said despite the market collapse due to FTX, Celsius, and 3AC in 2022, Bitcoin and Ether networks were working seamlessly. As opposed to the idea of decentralization and transparency in crypto networks, these companies were highly centralized and opaque in the way they operated. When asked by interviewer if she still stood by her earlier prediction of Bitcoin reaching $500,000 by 2030, Wood confirmed the same. She said it was in fact above the $500K level for the company's base range and that the bullish scenario is much higher than that.
We were able, with a number of papers, we called it our ground war. We were trying to help investors and advisors understand that if you take a look at truly disruptive innovation, which is all we do, and you look at other growth portfolios, large cap growth, growth generally, as well as the major benchmarks like the NASDAQ, you won't find much truly disruptive innovation in them. And so as we were getting hit so badly, what we also saw is investors taking tax losses in some of NASDAQ and other strategies and moving into our strategy, which was hit so hard because they did believe that we were going to rebound faster. We were hit the hardest. Our research would suggest that the $200 trillion that we expect by 2030 to be the market valuation placed on disruptive innovation, that hadn't changed. That hadn't changed. And so if you have a 5-year investment time horizon, yes, you move into our strategy. And oh, by the way, we are the new NASDAQ, which is one of the ways we were trying to convey, look, if you want to look at the future and truly disruptive innovation, the way the NASDAQ performed in the 80s and 90s, that's where we went with innovation.
While the ARK Innovation has jumped nearly 40% this year, more than twice as much as the Nasdaq 100, the fund is still down more than 70% from its peak 2 years ago, underperforming the index by about tenfold. Wood said that while 2022 was a horrific year for her fund's returns amid the rapid rise in interest rates, investors sold their positions in growth benchmarks like the Nasdaq and moved into ARK. The ETF saw positive inflows of about $1.3 billion last year, despite plunging 67% in its worst annual performance on record. Do you expect market to perform beyond investors' expectations? Let us know in the comment section below. If you like our content, give this video a big thumbs up and do subscribe to our channel.